Welcome to FX Signal Team. Today, we are going to start 10th chapter of Part 2. The main topic of this chapter is trading with Confluence. Let's start. If you look up the word confluence in the dictionary, you will find that it means a coming or flowing together, meeting, or gathering at one point. This definition also fits how we use confluence in trading. We want to see multiple factors coming together or meeting or gathering at one point on the chart, support the trade idea or entry signal. The more confluence a particular trade setup has, the higher probability it becomes. Waiting patiently for a confluent price action setup is how you trade like a sniper and how you increase your chances of success in the market. You can make a living just by trading one or two very obvious or confluent trade setups a month, once your account gets big enough. But don't worry about that for now, just worry about learning to trade well, and trading well means you wait, and wait some more. Then when a confluent price action setup comes along, you pull the trigger with confidence. Ready to check out some examples? Let's go. How to trade with Confluence. It's time to bring together everything you have learned to this point. Trading with Confluence is when you put all the pieces of the puzzle together. I have a very simple formula to help you remember how to trade with Confluence. I call it TLS or trend, level, signal. Identify the market's trend or bias. If there is no clear bullish or bearish trend, then you might have a sideways bias on the market. If it's a nice well-defined trading range, then we can look to trade the range as we discussed back in Chapter 3 of this course. Identify the key chart levels of support and resistance and mark them on your charts. You may also include the daily chart 8/21 EMAs as levels, as well as 50% retraces and event areas as well. All of these count as levels. Look for obvious price action entry signals in line with your market bias or trend from levels in the market. The market levels you have aligning with one another, the better and more confluent the trade setup is. Thus, when in doubt, remember TLS and ask yourself if the setup you are thinking about trading makes sense in the context of the daily chart trend, levels and signal. Here's a quick list of some of the main factors of confluence you should look for. An uptrend or a downtrend. A strong trend is one factor of confluence in and of itself. Static support and resistance levels. These are the classic horizontal support and resistance levels that typically connect highs to highs or lows to lows. Key support or resistance levels on the daily chart are best. Exponential moving averages. I use the 8 and 21-day EMAs on the daily charts to help with trend identification and dynamic support and resistance identification. Both the 8 and 21 EMAs are factors or levels that can add confluence to a price action setup. Event areas. Event areas are levels in the market where a significant price action event occurred. This can be a strong directional movement after a price action signal forms, or it can simply be a rejection of a level followed by a strong directional movement. Some significant event needs to have occurred at a certain point in the market. We can then consider this an event area or level. You can learn more about event areas in Chapter 8 of this course. 50% retrace levels. I personally watch for about 45% to 60% retraces for another factor of confluence. I don't get into all the other Fibonacci extension levels, as I think they are too discretionary and haphazard to be of any use. It's common knowledge that most major moves in the markets tend to retrace approximately 50% at some point after they form. But all the other Fibonacci levels are simply a case of if you put enough levels on your charts, some of them are bound to get hit. In other words, they are more messy and confusing than relevant or practical. An important note on the quality of a price action signal. The definition and form of a trade setup can also contribute to its confluence. Meaning, the better formed and more perfect a setup looks, the more confluence the setup has. What we are looking for is an obvious or well-formed price action signal. There will be many signals you see that look they could be potential trades, but far fewer fall into the category of painfully obvious trade setups that if you don't take you will literally be angry and feel stupid that you didn't. These are the best signals to trade. What you want to see is a well-defined price action signal. I have given you many examples of these in previous chapters, so have a look back if you need to refresh your memory. Basically, I am talking about a pin bar with an obvious tail on it, and a very small real body on it, that just looks perfect. A perfect-looking fakie with a nice long pin bar as the false break bar, or a nice-looking two-bar false break, or a small O-tight inside bar signal on the daily chart time frame. Tailed bars can also be good signals to trade. Ideally, you want a nice long tail on the best tailed bar reversal trades. More importantly, is that you want to see one of these signals form with confluence. When I see a two or more factors of confluence as discussed above, coming together, I call this a hot point in the market. For example, if we get a strong downtrend and then we see the market retrace back up to a horizontal resistance level that aligns with the 8/21-day EMA resistance layer, I would consider that a hot point and start looking for a price action signal there, either on the 1 hour, 4 hour or daily chart time frame. This is just one potential scenario. There are many others. Let's take a look at some examples. Examples of trading with confluence. Let's take a look at the factors of confluence supporting the trade signal in the chart below. First thing we notice is an overall uptrend in the market. So any buy signal that forms has the supporting weight of the uptrend under it. Next we see a horizontal level through about 1.6655. We also have the 8 and 21-day EMA layer to watch. Note the obvious pin bar buy signal that formed at the hot point in the market. The intersection of all three pieces of confluence, the uptrend, the horizontal level and the EMAs. When this well-defined signal formed with the weight of all three of these factors of confluence, it was a clear and high probability trade to jump on. The next example below is very similar to the one above. First thing we notice is an overall uptrend in the market. So any buy signal that forms has the supporting weight of the uptrend under it. Next we see a horizontal level through about 1.5422. We also have the 8 and 21-day EMA layer to watch. Note the obvious pin bar buy signal that formed at the hot point in the market. The intersection of all three pieces of confluence, the uptrend, the horizontal level and the EMAs. When this well-defined signal formed with the weight of all three of these factors of confluence, it was a clear and high probability trade to jump on. Finding confluent price action setups in agreement with underlying market bias. In the chart below, we are first looking at an example of identifying the underlying or dominant market bias on the daily chart. Then we will look at a chart showing a confluent price action signal in line with our bias. The first thing you want to do is zoom out your chart so that you are looking at the last 6 months to year of daily chart price data. Then, you simply observe what the dominant trend or bias is. If you see the market moving higher, then you have a bullish bias. If it's trending lower, then it's a bearish bias. And if it's range-bound, then you have a sideways bias. Our market bias tells us what type of signals we want to look for and focus on. Bullish bias means we are looking for buy signals. Bearish bias means sell signals, and a sideways bias can be buy or sell signals from the trading range boundaries. We have zoomed in on the above chart, and we are now looking at a confluent bullish-tailed reversal bar buy signal that formed in line with the sideways bias of the trading range this market was in. Note, whether or not a particular signal has confluence depends upon the context of the market when it forms. The bullish-tailed reversal bar below was a confluent buy signal because it formed at the key support level of the trading range, and since the market was range-bound, we had a sideways bias. The tailed reversal bar below also had good definition. A nice long tail showing forceful rejection of lower prices. This adds weight to the signal and can be considered another factor of confluence. Conclusion. I hope that you have a better idea now of what trading with confluence means. Trading with confluence is sort of a filter of trading. If a trade has little or no confluence, then pass on it. The most obvious trade signals that form at confluent hot points in the market will tend to jump out at you. After you've finished this course and get some screen time under your belt, these are the trades you want to take. Most traders overtrade, and most money, there is a connection there. It's not just correlation. Overtrading is usually the result of taking weak trade setups that have no confluence behind them. Don't be one of these traders. Learn to wait patiently for confluent price action signals, and you will be much better off in the long run. Remember, trading is a marathon, not a sprint. No one cares if you're profitable after a week or a month or two, but when you start bringing in profits on a yearly basis, then people will start to stand up and notice. You are not going to get to this point by taking on the fence-looking setups with no confluence behind them. Our next chapter will be exiting trades.